that right there, that wee little speck that totally isn't a proxy for the US Ponzi-onomics has, you wait for it, 1.8 trillion. And they didn't have the money for it. They borrowed it. They're actually rolling futures. They're doing something called the basis trade. Let's explain the basis trade as best can be done. There's a lot of Ponzi in all of this, but here's what they're doing. The leverage suggests that they're actually at about 100 to 1. You know about this. You know about derivatives. You know about the precious metals. We're getting a bit of price discovery at the moment. It seems to be causing some stress on gold and silver, 50 to 100 times. The basis trade explained. First, you buy bonds with instant financing. I love that there's this instant financing. I wish I had access to that. You know what I'd do? I would absolutely not buy bonds. I'd get borrowing to sell a record amount of short bonds, take the money that I get for selling bonds I don't have, get the financing to sell them first, and then take all that money. I'd take 100 billion short position on bonds, and I'd go start whaling into gold and silver like no tomorrow. You don't have access to do that. I've got 10 grand. You can lever me up 100 to 1 and then 100 to 1 on top of that and 101 to that, so that I can be short a few hundred billion in bonds and long a few hundred billion in gold. Why can't I get access to that? Because you are not in that leverage classes. You are not in the leverage classes that you can. The hedge fund buys a treasury bond for 100K as the cash part of the trade, but they don't pay the full price up front.